Well, good morning, everyone. Thomas Montgomery. Happy Friday morning. Today is September 5th, 2025. We get together most weekday mornings, talk about strategies, tips, techniques, share success stories, frankly, talk about the grant, what we do, and how we can collaborate. On Fridays, we do have a condensed session, so we're going to move through a little bit quicker today than usual, but you're always welcome to come back and join us next week. And then we post most of our trainings up on our YouTube channel. So 509 Pacific is in the background. That's our website. This is your key resource page, whether it be that you or your clients looking for quick cash, business funding, or to be a distribution partner. 509pacific.org is where you want to go. For reaching out to us, we recommend the text support line. So it is a text support line, 903-347-8042. If you need to speak to someone, that's not the number at the bottom of the website, is the nonprofit phone number. With that being said, our nonprofit applied for and received a grant. There are three mandates that really guide what we do. Number one, we focus on building financial literacy. Second, we provide free shelf corps to individuals to facilitate the knowledge that we cover here to accomplish number three, which is getting money in their pockets. Everything we do, of course, is legal and ethical, but we have some contrarian, not controversial, but contrarian approaches. Through our years working at the SBA and now as a nonprofit, we found a number of loopholes, a number of legal and ethical strategies that can move people from being not fundable to being fundable that normally is not accessible. Our daily agendas remain pretty much the same. We want to make sure that you're aware of 509 Pacific and the resources. We want to review briefly some key concepts on business funding. I think what's most important of what we cover each morning is number three. If you know of someone that's looking for money to start or grow a business, we can facilitate from beginning to end our entire process, and they should have less than $500 out of pocket total. So for the typical client following the typical process, we can help them raise $1 million or more for their business through term loans or lines of credit, and their total outlay should be less than 500. We'll talk about that. We want to calculate the cost of doing nothing and handle the Q&A. A number of you are asking, bombarding me almost with individualized questions. This isn't the forum for that. If you have individualized questions, you want to use the tech support line. All right, so let's go ahead and get started with the key concepts, because if we don't have this common understanding, we have a much higher likelihood of having a dissatisfied client. We focus on 100% client satisfaction, but we're only able to accomplish that if we have a common understanding of how this works. So first of all, you can't just want money, you just can't demand money, you can't pound the table like a 2-year-old and say, give me my fucking money. Of course, a 2-year-old wouldn't curse. We need to have a fundable business. It's a very simple concept, but I'll tell you, the majority of people that come to us, they want to ignore this. You can't just demand money. You can't just want money. We have to have a fundable business. That's mission critical. So really, frankly, people shouldn't say, hey, I want money for my business. What they really should be saying is, I want my business to qualify for funding. I know they don't think that way, but that's literally what they should be thinking. Because if we don't qualify, we're not going to get it. Now, what that qualification means varies tremendously. And this is what frustrates people. They want simple yes or no answers. They want very definitive black or white responses. But it's not that way. In business finance, there's lots of different lenders and there's lots of different loan programs, and each of them in general has their own underwriting criteria. So what it takes to have a fundable business is relevant to what type of funding are we going after. But in general, when it comes to credibility or fundability, there are 3 C's that we need to consider: credit, collateral, and capacity. Don't have to have all, well, some lenders require all three, but we don't have to have all three to get funding. There are some unique specialized niche lenders that will fund off of just one or two of the three C's. But we do need to at least understand this is what makes a credible, what makes a credible fundable business is having one or more of those three C's. Have to have at least one. Can't bypass that. Therefore, based upon the first 3 points, you can see it's really important that we work with each grant participant, each client, to figure out what do they want, what do they need, what are their mitigating circumstances, because a big part of this is matching them to the right type of funding. And then we work with them to make sure that they qualify and build out the loan package and documents, the substantiation. So what we do, what you and I do, is considered we're technical advisors. We're not the loan brokers. We're not lenders. We're not banks. We're not credit unions. There's plenty of those out there. What you and I do, frankly, is more important is we take imperfect people and imperfect businesses and get them perfect enough to get funding. That's what we do. It's kind of like auto mechanics working on cars. So if we started with the concept that we need to have a fundable business to get business funding, we've talked about some relevant considerations. At the end of the day, most, but not all, clients will end up going through one of these two different funding strategies. We're not limited to these two, but I'm just telling you this is where most people end up, either SBA or ABL. A lot of people don't know what you and I know, therefore, they're not even able to properly compare and contrast the two. So let's hit a few of the most important differences so we're all on the same page. And again, we can help clients with either or other. From an underwriting perspective, SBA and traditional business loans normally look at all three of the C's. They're not one of the niche lenders that looks at one or two. And then also, there's actually two rounds of underwriting at the bank and then the SBA. So it's not bad, it's just more complicated. There are a number of niche lenders like revenue-based financing and asset-based financing, which is on the screen, ABL. It's simplified because they're focused on one C. ABL is what we're doing the most of, and that's focused on collateral. Now, you might say, well, how's that going to work if the client doesn't have any of these three C's? What are we going to do? Well, we can help them have any of those three C's legally. If their credit, personal or business, isn't strong enough, we can help them with that. If they don't have enough collateral, we can help them with that. If they don't have enough capacity, in other words, cash flow, bank deposits, we can help them with that. So that's what's marvelous about you and I being technical advisors is we actually have legal and ethical solutions to address any one or more of these three C's. So beyond underwriting, owner contribution is a big difference between the two. And I've had people get so mad because we're educating and what we're educating is true, it's factual, but they don't like the truth. They don't want the truth. They want things to be the way that they want them to be, but that's kind of delusional, right? It's unrealistic. So we do need to realize traditional business loans, including SBA, they normally want the owner to have skin in the game. They normally want at least 10, and it could be 20 to 30%. So that's not my opinion. And frankly, I don't care about your opinion. That's a fact. That's a fact. So someone that's pursuing traditional funding, they need to have that amount of liquidity, or we need to help them raise that liquidity, which we can, because we're here not to say no, we're here to say, what do we need to do to get approved and then help them get approved. Conversely, ABL does not, as well as revenue. So revenue-based financing and asset-based financing does not require normally any owner contribution. So you can see that that's a significant benefit. The uses of funds is another key differentiator. Most traditional business loans, including SBA, are going to want to evaluate and approve how the money is going to be used from the loan proceeds. However, with revenue-based financing and asset-based financing, normally there are no restrictions of funds, so it can be used for anything. Loan sizes is the second to the last differentiator. Big deal. So SBA can start very, very small. There are micro SBA loans from like 5 to 10,000 and they go up into the millions. Normally they cap out around 5 million. Much different than revenue-based financing and asset-based financing. With both of those, bigger is better, usually in the eyes of the lenders. Some of our primary lenders, like Bank of America and Chase, they won't even go below a $5 million capital raise. Now we have others that'll go down to two and some that'll go down to one, but one is the floor. 1 million is the floor. Now you might say, well, that seems like too much. My client or myself, I don't need that much. Well, we can always set that up as a line of credit. So you just pull from it what you want, but we do need to go into it eyes wide open. SBA is great if you're looking for like under 50,000, we can do micro loans, pretty loose underwriting, and that's fine. In contrast, ABL is meant for larger capital raises. The last differentiator I wanted to cover this morning is payback assistance. And frankly, SBA loans have none. You borrow the money and you're expected to pay it back. Through the grant, the ABL has a subsidy whereby we're liquidating the collateral that we provide. And by liquidating that collateral, we're creating cash flow into the business. The way that we've designed it is more cash flow should be coming into the business than the monthly loan payment. Therefore, it's covering the cost of the loan payments typically for 2 to 3 years. So with that being said, we've covered the key concepts. So really important that we have a common understanding. All right, so let's move on to how to turn 499 into a million plus in about 30 days. So there's really, frankly, a three-step process. The first thing that we want to do through our model is to get them a shelf corp. We give the shelf corps away for free. There is a processing fee. The amount of the processing fee is determined based upon the referral partner. But the bottom line is we want to provide each participant a clean business that doesn't have issues to build the capital raise around. So to do that, if you're not working with a reseller or a branch office, come to 509 Pacific, scroll down here in the middle of the screen, and you'll see right here is how to get the free shelf corporation. Very simple. Now, if you're working with one of our resellers or branch offices, visit with them. Takes us about 7 days to get those deliverables over, and at that same time, we'll be able to get them offers, cash offers in almost all cases. Now, this is the initial round, the first tranche. This is not meant to be, oh, we've got everything built out for the large final capital raise. We're not ready for that yet. We're about 7 days in. We want to get them offers. They can accept the offers they want. They can decline those that they don't. There's no hard inquiries to be able to get those pre-approvals, and that can put some working capital into the client's hands, typically within 2 weeks of starting with the program. That's the design. Once we've done that, then we actually go into step three. Step three is now getting the business ready for funding, because just because the shelf corp has been delivered, that doesn't mean that it's all ready. It in itself is built correctly. But now we need to determine how much funding the client's looking for, uses of funds, get the paperwork in order called the loan package based upon what they want, what they need, and their mitigating circumstances. We apply for funding and then get funding. So there's actually 2 rounds of funding typically. The first round, which should hit their bank account normally within 10 to 14 days of enrolling. And then the larger capital raise, and the timeline for it is, of course, dependent upon their wants, needs, and circumstances. We try to do it within 30 days. The bonus item here is really great. Some of you have overlooked this, and I think it's a shame. So when we talk about the 3 C's, one of the 3 C's is capacity, cash flow, deposits. We contribute to that, and that's another unique aspect of our program is we can literally put daily deposits into the client's bank account. And it's real money. Doesn't have to be paid back. Now their bank account looks stronger, their financials look stronger, and of course, they have more money. All right, with that being said, the last topic is comparing the cost of doing nothing. For those of you that are distribution partners, you'll often run into people that are frankly unreasonable. So I think a healthy approach, an effective approach is to ask them, okay, I can describe to you how our grant program works, which is kind of what we just went through. But first, prospective client, I'd like to know what other options you have on the table right now. What else are you considering? Like if you've ever gone to the Lamborghini dealership, the first thing the salesman's going to ask, what else are you looking at? Are you looking at Ferraris? Are you looking at Jaguars? What else are you looking at? That they want to know kind of what to compete against. So what I'd recommend is first ask, what do they have on the table now? How much do they have pre-approved? What's the interest rate? What's the repayment terms? Does it meet their needs? Because if we can't beat what they have on the table, we should just encourage them to follow that. But in most cases, no one else is offering the proposition that you and I offer. The proposition that you and I offer is, hey, there are grant subsidized program with less than $500 out of pocket. And in about 30 days, we should be able to position you for $1 million plus capital raise. What else are you considering? And our funding is guaranteed in writing, by the way. What else are you considering that competes with that? Typically, they don't have anything that competes with that. Also, and the point specifically is ask them, okay, well, I know it's going to require some trust. You know, everything's in writing, it's compliance, legitimate, but it's going to require some trust. You're going to need to pay $500 to have the shelf corp transferred to you. Everything else is designed to be self-supporting. So let's say that you didn't do this prospect, you kept your $500. Fine. What's the financial impact of you not getting $1 million in plus or minus 30 days? What's the opportunity cost? And so if you can help them better frame the proposition, it's unbeatable and you should enroll nearly everyone. All right, so let's go ahead and open it up for a couple minutes of Q&A. And again, we like to wrap it up within 20 minutes on Fridays. All right, Selena's got a question about the Shelf Corp. So we deliver the Shelf Corp, and I'll go over here in about 7 days. We try to do it sooner, but in about 7 days, 1 week. And then it comes with the entity and the business plan and the financial forecast and the commercial address and the EIN and so forth, collateral and so forth. But you're right, Selena. They may look at that and say, no, I don't want it positioned that way. I want to make changes, and that's perfectly fine. We can make, I think, pretty much whatever changes they want. The Shelf Corp is kind of like a business in a box. Frankly, it's ready to go forward, but some people want to make changes. You know, some people buy the car and they want to turn around and change the wheels and tires on the car. If that's what you want to do, doesn't really affect how it drives, fine though. So yes, Selena, never be concerned if they say, well, I don't want my business plan to say management consulting. That's what we set all the Shelf Corps up because it's one of the most fundable industry codes. But they say, no, I want to be involved with adult entertainment. Okay, then if you don't want to use the template as it is, we can work with them and edit it or change it. But management consulting is one of the best industries for funding. Yeah, so bottom line, Selena asked, what if they want to make changes to the Shelf Corp? Not a problem. All right, any other questions, comments, concerns? Again, our website's 509 Pacific. Text support line is 903-347-8042. Our YouTube channel is great for getting caught up with more details. But what I'd close on is I just encourage you to take action, right? I talk to such bright people. John Stockton's on here. I talked to him yesterday. I talk to bright people every day. And John and I agree what typically separates the people in our society that are haves versus have-nots, it's not race, it's not gender, often it's not education, it's who takes action. People that take action can accomplish results. If we take no action, there won't be any results. And so if you need quick cash, take action. Here it is. If you need a fundable business and business funding, here it is. If you want to earn income and help others become a distribution partner, it doesn't cost you a penny to become a reseller. It doesn't cost you a penny, not even a contract to sign. Our resellers make on average $50,000 per referral. And again, I know for a lot of you, 50,000 per referral is not enough or not much. Take Brian, for example. Us offering Brian an extra 50,000 per referral, and Brian's kind of a big hitter, so he could reasonably do 5 a day. I'm sorry, 5 a week, 20 a month. I mean, 50 times 20 to me is a big figure, to Brian not. But for the average person, I mean, if you just referred in one person a month, an extra 50,000 a month would help the average person's budget. But it's not get rich quick. It's not lottery. It's not MLM. But yeah, if you'd like to help people and help us accomplish our mandates and earn some extra income, you should make right about 50,000 per referral. It's not that bad. I know it may not be what you're used to making, but it's not that bad. All right, everyone, we'll see you back on Monday morning. If you need any help, send a text and we'll get back with you as soon as possible. Have a great day. Bye.